Hi friends, my name is Dr.Bharath. Today's video, 5% crash in HDFC Bank and HDFC Shares, should long-term investors worry? Today, the shares of two large companies from the HDFC group, HDFC Bank and HDFC, crashed more than 5% each. Due to this, overall index also became negative since both these companies have a significant weightage in the Nifty 50 index. The reason for the crash in the shares of HDFC Bank and HDFC was that Morgan Stanley Capital International, which is a company that provides investment data and creates indices for international investors, has released a report which says that it will use an adjustment factor of 0.5x to calculate the weightage of the merged entity of HDFC Bank and HDFC in their MSCI India index. HDFC is a part of the MSCI India index with a weightage of 6.74. Usually, foreign institutional investors see this MSCI index and accordingly invest in Indian stock markets. So, this particular index is very important. HDFC Bank is not part of the MSCI index. However, it was expected that the merged entity would be a part of the MSCI India index because HDFC Bank and HDFC are shortly merging in the next 2 months or so. The markets were expecting that the combined entity would get full adjustment factor of 1x, in which case the weightage of the merged entity would have been higher, around 12%. That means HDFC around 6% weightage, HDFC Bank another 6% weightage, total weightage would have been for the merged entity 12%. That was the expectation. Inclusion in MSCI index depends on stock's foreign room. Foreign room means the proportion of shares available to foreign investors compared to the maximum allowed. For example, if the maximum allowed foreign investment in a particular company is X, then more than 15% of that has to be available so that foreign investors can further invest in that particular stock. If it is very less, then they will not include it in this particular index. After the merger of these companies, the foreign room or the scope for foreign investment is just about 15%, slightly more than 15%. The rule says that if foreign room is much higher than 15%, then the merged entity of HDFC Bank would have got higher weightage and hence huge inflows could have been expected from foreign institutional investors. In such a case, the merged entity of HDFC Bank was expected to receive foreign investment of more than 24,500 crores since institutions which follow the index would have been forced to invest more money to adjust for the higher weightage. This would have been a very positive news for the merged entity. But due to the further inflow of funds, if the foreign room falls below 15%, then MSCI would need to reduce the weightage. So, hence it has given an adjustment factor of 0.5x beforehand itself, because if little bit more investment comes of foreign investors, then the foreign room falls below 15%. So, the merged entity is likely to be given an adjustment factor of 0.5x, which will result in almost the same weightage of around 6.5%. Earlier it was 6.74% for HDFC. Now the merged entity of HDFC Bank and HDFC will have a weightage of 6.5% only, so almost the same. And in fact it is slightly lesser. So it would result in marginal outflows of Rs 1200 to 1600 crores. Due to this, many large investors might have already sold some stake in HDFC Bank and HDFC before the change in the index takes place after the merger in the next 2 months or so. The market capitalization of the two companies fell by almost 74 to 75,000 crores today. This is because they are expecting further outflow. Before the further outflow happens, many investors have already sold. However, since the fundamentals of HDFC Bank and HDFC are strong, this news will have only a short-term impact. Share price is likely to bounce back in the near future once the institutional investment in the merged entity stabilizes and there is no more changes. If you like this video, please click the like button, and if you understood the contents of this video, type understood in the comment section. Thank you for watching this video. Bye bye and all the best.